Welcome to a new season of Market Makers IL, where we pivot slightly and do a deep dive into the world of private banking. We're going to tell you why, we're going to tell you how, we're going to tell you the details of some of the products. We think you're going to learn a lot, we're going to have a lot of fun, and we hope you do too.
And still, no suits, no ties, and we'll leave no question unasked.
And we'll be talking about conversations that talk about shekels.
And some dollars.
And no investment advice. 2026, our global outlook, theme number 10 is IPOs and M&A. Multiple sectors are set to benefit. This is our 10th theme, and we have found two people who are better suited than most to help us understand the IPO process, the good, the bad, the after party, the consequences of missed earnings estimates for Israeli companies with a public listing in their future. It's our pleasure to welcome two of the best and two of my favorite local investor relations professionals from the local market, Daphna and Rami Rozen. I resist the urge to call them old friends because everybody will focus on the old. Suffice to say, in my prior life as an equity analyst, I had a lot of interaction with both of you. And while I may have at times made your lives miserable, somehow we've remained close business friends and as colleagues. Daphna and Rami are the hosts of a great local podcast, Mashkiim B'Kesher. I was privileged to join one episode. They even let me do it in English. Now it's time to return the favor. Let's do a quick intro. Daphna now runs her own IR and consulting firm after years of running IR for multiple publicly traded companies, included Valens, Bank Leumi, NICE. She also sits on the executive board of the Israeli IR Forum. She's got experience in M&A and strategy and all sorts of other good things at the corporate level. And so I think her insights will be really helpful here. Rami's currently the head of IR at AppsFlyer, which we will not talk about. Before this role, he had similar roles at Perion, Orbotech, and Allot. And he also spent a little bit of time, maybe a lot of time, as a sell-side analyst. In short, while Israel and Israeli companies have somehow developed this reputation for neglecting PR and IR, I don't know where that came from, our two guests have spent many years working to improve that image in their own ways with both the foreign investment community and the local investment community in Israel. And so it's great to have you both here.
Thank you. Great being here.
Any guys, things you want to say as an intro? You can pull back the curtain on things that I've done, or else what we're going to do is we're going to pull back the curtain on what really happens around and about the IPO process. But let's start with the company. Michael, maybe you got a couple of questions for these guys, because as you all know, Michael spent a lot of time before becoming a private banker in the equity capital markets market. So I think this episode speaks to his expertise as well.
Yeah.
Sure. Yeah, that's before I was joining, the private banking world in Israel. So I was working in ECM, in equity capital markets, for an American bank in London. So I was right in the middle of the action.
Yeah.
And I used to speak a lot to analysts, to IRs, and was, I think the interaction between the company, the sales side, the banks, the investors, and you guys is absolutely is very very intense and needs to be well coordinated. So maybe the first question to you is, how important is it to be publicly traded? And how much time, I would say, is spent looking at the stock price itself?
2 in 1.
Yes.
So first, let me say thank you for having us here.
Pleasure.
So as Joseph mentioned, we're usually on the other side of the mic. So thanks. So first of all, maybe I'll focus on how important is it to be a publicly traded company. So I'll take one aspect and then maybe you can talk about the other. One is, first of all, from a business perspective, I've found it to be very important many times because you're obliged to, and you need to disclose information so it's out there. So it's many times also a positive when you want to win new business, for example. So that's one of the great, I'd say, positives. The stock price maybe.
I think that there are two additional reasons why a company should be a public traded company. One thing is, once you're a public company, you get another vehicle for external growth using your share price. You can acquire, can do M&A using your stock, not just cash, which is a big plus. Another reason is employees' retention. RSUs, stock options, are becoming part of the compensation package that employees receive. And that's definitely one of the criteria that when employees choose whether to work in this company or the other. That's one of the reasons why choosing maybe a publicly traded company over private asset.
The question I have here is really, once you're a public company, isn't it like a bit? It's probably a little bit cumbersome to like every quarter report to the regulator, to the stock exchange, and everything. And at the same
It's
time,
fun. Come on.
yeah. and
Just like going to get get a root canal.
and then
Otherwise, how would I meet Joseph?
exactly.
That's the best thing that happened to me.
Every quarter, Joseph
IRP.
is coming with questions, and but actually leads
We'll
me
get to that part later.
Yeah, it leads me to maybe we can talk about later, but the short term approach, like every quarter you have to deliver, and therefore maybe you spend more time on the shorter term targets rather than the very long term.
You have a great
vision.
definition for that, right? Definitely.
The marathon.
The marathon, yeah.
I call IR. I have all kinds of definitions, okay, depending on what your question is. But basically, one of them is like IR is like a marathon built up or many, many, many sprints.
Mm-hmm.
So that's how I see it. And in general, yeah. So you need to, get ready for the quarterly results reporting, and let's see what the SEC does now in the States. But for now, at least that's how it works. On one hand, it could be a bit tedious, but on the other hand, it's also, I think, an opportunity for management and not only the people directly involved in IR, but also strategy or the business functions to really be on top of things.
Mhm.
And it's always important to also have your longer term goals, right? You need to get there, and it's very important to manage expectations. And maybe, we'll talk about that more later, but basically it's part of the game.
Right.
When you're at a tech company, though, and the volatility, like I've worked for publicly traded banks, but I've never felt like my department was really influencing, maybe more sort of our current job. My department was influencing the stock price. But at a tech company, I think that probably runs pretty deep. And so I think the follow-up question I would have is, if you spend a lot of time looking at the stock price, everybody talks about, the CEO is working towards the quarter in the stock price. And we could debate that forever. But
Right.
I think my question is, how do you feel about it as an employee when you walk around the hall and you see a tech up can drop 30% after a bad earnings report? How does that affect morale when you do get paid in stock, but these have strike prices that you're now underwater in?
I can say from one of the companies I worked for, I won't mention names, maybe at the end I mention names, but one of the companies I worked for, every day, 4:30, they stop writing the code and they move to Yahoo Finance to check on the share price. So that's one thing. They become more into the share financials and everything because that's part of their package. Obviously, when drastic movement in the share price happen, that has to impact, but because that's news. And the thing is that most of the employees have no idea what's behind a drastic surge in the share price or a decline in the share price. They don't have a clue. Sometimes you have this situation where you have, let's say, earnings. You have a situation of beat but not raise. So the stock did fantastic job. The company did a fantastic job on the quarter, but the stock decreased by 10% because there was no raise following it, right? And at that situation, they say, okay, come on, how come we did a fantastic job and the stock goes down?
Sometimes it's not only employees, and there are some companies that also the management are like less experienced. Then that's also so. And then also it's interesting. You talked about high tech versus a bank. So I had the opportunity of working both high tech and Bank Leumi, and today also I work with not a bank, but a financial company in the financial arena as an advisor. And also in general, the business, it's much, much, much smoother, I'd say, being on the financial services type of side. So that also impacts and makes less, I'd say, less of a day-to-day, I'd say, running and looking at the stock and stuff.
So if you put that in perspective, do you think, and we talked about this a little bit before we got into the studio, a lot of times you'll see a small Israeli public company get bought by a larger one.
Mm-hmm.
And so do you think there's an element of pride? Would somebody rather become the first Israeli company to be a $100 billion company, where there's some element of pride? You're looking at that, it's your work, you've done all this, or just to be subsumed by one of your old companies, to be subsumed by a KLA Tencor, and now you're working at a much bigger global firm. How do you think that affects local employees and the morale?
I actually was always on the acquiring side. So I can't from my own perspective, I can't go the other way. And being a company that was always acquiring and looking to, to be bigger and larger. So that did give a lot of sense of pride. As an IR, of course, if you're acquired, then you might lose your job, right?
Right.
So for an IR person, obviously, although we
You
had
never had the situation, right?
no, I was always on the acquiring side or in companies that, yeah.
How did companies feel when they got bought by an Israeli company?
One of the things I can say in terms of, as you said, I also have experience in going through the M&A process. So, for example, if we look at NICE, which is a very acquisitive company, and when I was there, also we did like tons of acquisitions. Then one of you check many data points. So it's not only the product, but you also check the cultural fit, and that's very important. And sometimes also it depends what company you buy. So in terms of how symbiotic it is and how you integrate, but in terms of the process, there's the or many checks that you do in advance, and then you have a dedicated team that works on the post-merger. So
The culture thing is really, it's not so simple, because there are obviously gaps in the maybe in the way people work, in the overall culture of a company that is acquired that is not from the same geography. It's not an Israeli company. It's from a different country. So it's, I would say, case by case, but it's not always an easy job managing these gaps between.
so to make an acquisition work, so you need to again go through. It's much easier to acquire than to make it work going forward.
All right, so we've covered some of the M&A side. Maybe, Michael, from your old perspective, some IPO questions for these guys.
Yeah.
Sure. Okay, so on the IPO side, depends on the jurisdictions, but obviously you have a lot of what we call investor education process. So the investor education is obviously trying to prepare the investors, with regards to educate them on the company
Before the
equity,
IPO, right?
before the IPO. So this whole preparation is actually very important. When I think you guys, within your different roles, where do you step in? When do you step in, and when do you actually add value to the process? I think I would be interested to hear from your perspective, because from my old perspective, when I was running in the syndicate desk, talking to the company and stuff like that, there was a whole life behind the IPO, and it would be interesting to hear from your perspective, how you went through that.
Do you want to start?
Yeah. So a company were, let's say, 6 to 9 months before going public, they get into the final stage of what they call IPO readiness. As part of that situation or process, it's good to add an IR function to the finance team in order to be more known. When one of the stages is what is called test the water. Test the water is a series of meetings before the IPO,
pre-sounding,
kind of educate investors what the company is doing. But even before that, if this is not the first time that the potential investor meet management and get exposed to the idea or to the story, if you are able to spend some time with those potential investors, prospect investors, then they will once they get to the test the water, they already know who you are, what you're doing, what's the potential, what's the story. And I think that is a more solid, I would say, education offering for this type of investors.
But this is interesting, because here the IR role is absolutely crucial. When you think about Israeli companies, founders are tech specialists. They've been dealing with tech all their life, and all of a sudden you have to take the company to investors. They don't know those investors. They have no clue who they are. So the IR role here is really to connect them to the right, or either to the banks who can help you with the process ahead of that, or with the investors directly. So without that role, there's no raising.
Right. I can also give, if we go through another, actually, an example again from Bank Leumi, and it was actually, which obviously has been public for many years, but while I was there, one of the things we did, and very interesting, and actually was raising debt. The first Israeli bank to raise debt in foreign exchange, and the whole process was very similar to an IPO. And I can say that me as an IR person, I was involved in selecting the bankers, working with the bankers on the story, on the presentation, working on the whole, all the filing documentation, meeting with investors, preparing management, and preparing up for the Q&A and the questions and it ended up being a very successful one. But but in general, I think it's very, very important that IR are there from the beginning.
Yeah, because you have to identify the right people within the right institution. It's not like just bringing a contact at a big investor, institutional investor. If you don't have the right person who will be the decision maker, you have, you have done, 10% of the job. So it is critical as well.
I got to jump in here with one little question.
Okay.
And I don't know if you're gonna actually reveal this, but you talked about selecting bankers, which I've never been part of.
Okay.
Firm brand name or industry expertise? What's really the what wins?
It's a combination.
I knew she would say that.
Yeah. But that's
too politically correct.
No, it's a combination, because you want at the end of the day, you want the process to be successful, right? I think it's important also not to have just one name. On the other hand, not to have too many, okay? Because if you just want it, I don't know, for doing a favor to someone or for the sake of. So it's really important to, because when bankers come, and you can both, bankers always the best, number one in, but you need to.
I can tell you an anecdote on that. When I was a junior analyst in my previous, a lifetime ago, we were showing, the league tables on why and how we were the best. So we're running league tables with privatization, without privatization, with deals above $100 million, deals below $100 million. So basically all kind of fillers to show us at least in the top three, so that when we come to you guys as clients, so this was a key thing. Then I guess there's a lot of other things that I guess you would be looking at is maybe the depth of the sales team, the depth of the analysts, the analyst ranking. I know Joseph was very highly rated as an analyst, so this is also very important in the specific industry. All these kind of things are so the combination of all these parameters are I would say this, and sometimes also. Analysts were not involved in that process, but the investment bankers were trying to give some kind of valuation of the company, which was, very often optimistic. And here you can see a gap between different banks' valuation, but also you as a client, as an IR and the team, you have to figure out who's been very aggressive, who's been realistic, who we can count on. So this is also quite tricky to select the right bank.
I think that there's another issue here, which is not always you need to pick, let's say that Goldman Sachs is, or I don't know, JP Morgan would like to be.
Who we're just mentioning because they usually come out at the top of the polls.
Yeah. I think a key element here is the quality of service that you receive post the IPO. Because the IPO is just the beginning. It's the stage where the bankers receive a lot of money for the great services that they are doing, but then they have to do the real service. NDRs, conferences, non-deal roadshows, and NDRs. No, that's the same. Yes. And conferences, investor conferences. On those NDRs, what is the quality of meetings that they're able to arrange?
And that goes back also to just,
Are they able to arrange meetings only in, let's say, New York, Boston, and San Francisco, or also in what they call second-tier cities, right? Where they have a suitable investor, but it's less frequent that they will get to visit Kansas City, for example, okay? That's a key element, in my opinion, the quality of service that we receive. So sometimes it's not the largest bank, it's the most suitable bank.
Right. And then that goes back to your after party. If you mentioned like the pre-IPO and the after party. So pre-IPO, everyone's going to be chasing you, right, as the company, but then
Forget you.
Well, to use a clean analogy, because I've got a better one than this, but
Okay.
I'm not going to use it.
okay.
The IPO is kind of like the summer associate role where they wine and dine you. And then the after party, when you're covering the stock, and we'll jump to the post-IPO, is the full-time job.
Exactly.
So
True.
I want to ask one more question about the IPO because we got a lot to cover and we don't want to take too much time. There's this concept, and I don't know how relevant it is to you guys, but maybe just your thoughts, because I think companies that are going through this process and thinking about it this year, because I think this will be a good year. This whole idea of leaving money on the table, meaning at the end of this IPO process, you've built the model, you've told the story, you're out there, and it's the day of pricing right before you ring the bell, and you're like, $30 a share, $32 a share, $40 a share, whatever. And are you looking for that pop on day one? And if the pop is really nice for the stock, but it means the company got less money. Do you guys, what do you think about leaving money on the table?
I'll go back to my general way of looking at things is don't look at, the immediate, look at the long run. That's my thesis. That's how I look at things.
Totally agree.
I think that even if you do end up leaving money on the table, as you said, and eventually you become a great company, a great performer in terms of earnings, results, etc., you get to the follow-ons, right, at a certain point. At that point, your stock will be at a higher stage, and you can't really manage the amount of money you raise based on trading patterns by I don't know who.
Mm.
I think if you, as Daphna said, if you are performing well and consistently, then the money will come, even if you left some money on the table.
Performing and knowing how to also manage the expectations.
Exactly.
Because you could be a really great performer, but maybe expectations are set too high. So,
All right. So people ask me if I miss being a research analyst, and my answer is sometimes, but what I really don't miss is earnings season.
Oh.
So let's jump into earnings season. You've seen some earnings seasons. You've seen some stocks move.
Yeah.
So there's two things I want to get into. One is what happens behind the scenes at the company level. So you've gone public, and now you're running this IR department. What do you need to do to get ready for the big day?
So first of all, get out an announcement. First of all, get out an announcement on when you will be announcing results. That's talking about Israeli and non-Israeli companies.
That you didn't miss the quarter?
Exactly.
No, I'm saying in general, because you talked about Israeli companies. Some Israeli companies, many of them actually, don't even put out the date. Leave aside that some of them don't have the earning calls. Okay, they do announce obviously results.
You're talking about Israel, traded in Israel.
Yeah. Companies traded in Israel. Okay. But if we talk about, the way it works in the world.
So best practices.
Okay. First of all, put out obviously the dates, and try to be consistent also. And so that's number one.
Make sure you have a Zoom link for the call, right? On the press release.
If you do a Zoom. Actually, I think American companies do just voice calls, audio calls. But
you understand the meaning.
And then really in terms of the process, okay, the way I've been working is, first of all, you have like sessions and you put together all the outcome rate is the script, okay? That the CEO and the CFO will be reading on the call. But in advance, what you need to do is first of all, look at the expectations that you've been setting, what's going on in in your market, okay, the direct market and the more expanded market. Put together like a process of meetings with the relevant people. So it could be also, again, strategy. It could be the business people. Talk about what our messages are, what we've done well, what we can do better, and where we're going. First of all, understand the facts, okay? And then put together all the process of the script, prepare for Q&A, do rehearsals if you need to do rehearsals with the CEO or the CFO reading the script. And be on top of also another thing I like doing is looking at the analysts that cover you. What questions are they asking other companies in your space if you're not the first to be announcing results?
It's early to be asking this, but you're doing those kinds of, like, when you do that now, you can read through a lot of transcripts. Are you using AI for that stuff already? You're
Yeah.
doing consulting now.
Yeah. So AI, so there's two aspects. Okay. If we, first of all, certainly, yes, for monitoring through, scripts and information and stuff. One thing I would say, I think AI is still in its infancy, is many times they will give scores of positive and negative to like what's on the call. And I saw sometimes words like, they just do it automatically, like declined or reduced, but it could be reduced operating expenses, which is good. But then, they mark it as negative. And I don't know, anything you'd like to add?
It brings up so many great stories I can tell about Joseph. I mean, it's unbelievable. But it's maybe, we can have another session.
That's for the after party for the podcast.
Yeah. Anything I missed out that you'd like to add?
In terms of the process, no. I mean, today there are different ways to conduct the call, for example. I mean, any conference call, as you very well know, is built from prepared comments by the management and then the open Q&A. So the prepared comments can be pre-recorded, for example, or it can be in a live version. It can do different variations to that as well. Very important, as Daphna mentioned, to be fully ready for the Q&A. So you need to think of the toughest question, the most difficult question that you can be asked. Be well prepared for these kind of questions. Most of the time, I think you won't be asked those tough questions, but it depends on so many.
How do you deal with terrible presenters? Sometimes CEO, CFO, just are not
I
built
only
for
worked
that.
with the great ones. No, so one method is, as Rami mentioned, is the pre-recording.
Right.
That's one way. And train them or work through, like there's, the nitty gritty here of, I don't know, one of my secrets, okay, but I'll reveal it here, is, first of all, if we talk about the prepared remarks, mark maybe words that need to be marked, or in terms of the pronouncing them. And that's more, when we're talking about Israelis presenting in English. And the Q&A, prepare. Don't let them get away with it. Because sometimes, it's, no, work on it and it pays off.
Mm-hmm.
So how many days is this? Because one of the things I think we're trying to get to with this episode is, what's the cost of the IPO in terms of time? Meaning, you're going to go through this process, you're going to end up with this great golden ticket in your hand that you are now publicly traded.
Mm-hmm.
This cost, though, is you've got this earning call. So now you've got this call. How much time? And I was going to jump a bunch of questions together so we can move fast. But you've got the prep, you've got the call, you've got the call back with the analyst. If you add all that time up, walk us through what you're doing there and how much time you spend going through these numbers with the analysts after to get the model right.
So I'd say in general, again, the way it works, it's that, but then it's also, you have the NDRs, you have conferences, you have one-on-one meetings. Yeah, no, I'm taking in terms of, okay, so you're talking specifically.
I want to know this earnings, this is 4 times a year, rain or shine, you're getting on a call. How much time are you preparing?
It's weeks.
It depends on the complexity of the company.
Yeah, but in general, I'd say the process.
3 weeks or so.
3 to 4 weeks. It depends on the company. It depends again on the complexity, the size.
Once you write a script, there are drafts, a second draft, and third draft.
Mm-hmm.
And I worked for a company that on the day of earnings, some of the prepared comments were changed. So there were like 30 versions of drafts until that point. So.
Also, and there's also the press release. Okay, so you have the press release. You could also do an infographic. It depends. And you also work.
And there's legal and compliance looking at that.
Exactly. That's what I was going to say now. Exactly. You have legal. So you have internal, and some companies also use external legal to review, and also auditors. Okay, to review the. Plus, also me as an IR, I'm also very involved in the financials themselves. So in a high-tech company, it's just it's not a lot of information, but in the in financial services, it's hundreds of pages.
Think about what Daphna mentioned earlier about setting up the guidance. There are so many considerations. What kind of guidance you give, because there's the guidance, there's the reality. There's so many aspects of that impact that. So just thinking how and what you're going to put in that guidance section takes a lot of energy, a lot of thought, a lot of time.
What's your midpoint? What's your bottom?
Yeah, we've seen guidances, moving stocks, up and down dramatically.
Who's more important on the earnings call? Because we're going to jump to the buy side. Michael, ask you a few questions. Who's more important, sell side or buy side, as you're doing this
In the earnings call?
on the earnings call? Or does it matter?
On the Q&As part, you mean?
Q&A is usually sell side, but when you're thinking about your script and you're thinking about who are you speaking to?
Everyone. That's the thing also with IR, right? You have different audiences, plus also employees will be listening.
That's a great
So
question.
that's also taken into
That's
consideration.
not on the prepared question.
That's a great question, because all of those are actually moving the stock. Those are the
Yep.
ones moving the
Yep.
stock.
And
The
going back to the
yeah.
ECM position that you were in, so that's actually a center piece of, the analysts won't speak to the investment bankers, we'll speak to
Yeah.
both, and then
Yeah.
so it's a whole.
But
And the-
maybe sometime, first of all, those who make the actual transaction are the buy side. But those who, let's say, deliver the message are the sell side. So, and sometimes you need to act really fast because the earnings day is maybe the most substantial day in a given quarter for investors, from investors' perspective. So those who will bring kind of the message the earliest are the sell side, right?
Yeah.
So it's, as Daphna is saying, sometimes it's a combination.
Yeah.
Or the press, and also there's the right. There's the press. You have all the headlines, Reuters. and
Yeah,
stuff.
absolutely.
So
True.
you also need to be on top of that.
That reminds me that sell side with buy side, actually it's true that the sell side delivers the message. After working in ECM, I worked in equity sales, and buy side so investors were calling me to find out what other investors were doing in the market,
Right.
because they have their own
Right.
convictions, but what others are doing.
You trade information here. That's
Yeah.
what you do. That's
Exactly.
a profession.
So let's switch gears and move to the buy side itself. So in buy side, we usually call it long only investors, which are institutional investors who would buy the stock and then sell when they think they want to take profit. You've got the hedge funds, obviously, which are more diversified in terms of trading strategies, and you've got the short sellers as well, the activists, and all these kind of things. How do you work with the buy side? What is the relationship? Because you mentioned trading information is key. So how do you trade information with this?
I'd also mention, I think another aspect is also generalists versus industry specific
That's right. Absolutely.
investors.
Yes.
You know what I learned over time?
Yeah.
I hate to say this, and I'd love
Okay.
to hear your opinion. Over time, the generalists make more money. They're less attached to the whole idea of the thing.
Maybe also because you're more diversified. But
Anyway, that was just a side throw.
Yeah.
comment.
But first of all, you have, and we actually have a joke, Rami and I. Rami and I met when I was an IR person, and Rami was on the sell side. So, right, and then never mind, it's sell side, but it's the same also with investors in terms of like he would try to ask me, all kinds of
I was
questions.
covering nice at the time. She was.
So I used to, like, when there were things, I would say, like, as we said, da 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 da. So it's always like, yeah. So the in terms of like, do you mean what? How often do you speak to them, or what type? The information needs to be the same type, the same, right? Only information that the company disclosed. But how often it depends on the relationship. And many times you'll have actually hedge funds that will be in touch a lot if they hold, I'd say, a substance of the stock on their side. And then the question is also, and it also goes down to the relationship with the specific buy-side people. If I handle it as IR, or sometimes I can, if we go back to, sometimes I feel like, or I would see that it's important that either the CFO or the CEO, even if they didn't ask for them, do the communication.
I think it also has to do with the overall goals as far as your cap table goes. I mean, long only are often associated with institutional investors who, I would say, trade less frequently compared to the hedge fund that can buy the stock and sell. If it goes up 10% within a month, they will sell it and pocket the profit, etc. So it has to do with your goal, whether you want that, let's say, the first largest 20 investors will be mostly institutional, holders, or a mix also of hedge funds, because it's important for the trading level of the volumes of the stock as well. So there's lots of considerations. I think short sellers or activists, I think short sellers and activists are more or less the same, I would say, more or less. That's always, I think, a concern as far as I am.
Yeah, it's not the ones that we would proactively.
One time at the company I worked for, I got a call from one of those activists. And I told my CFO, "Wow, what's he gonna do?" He's asking for a meeting, and then this guy's we took that meeting, and this guy says, "Don't worry, I'm not from the short seller department. I'm really interested in understanding the value of the company and want to."
And then there's also another type of investors, retail investors, which are becoming much more important, but I find them less, being less in touch directly with the companies. It will be more on, social media or different platforms.
Would you give them access if a retail investor called you?
To talk? I'll tell you what, yeah, it happens so rarely. I wouldn't let the CEO or CFO, but probably, again, I can
maybe through a family office, maybe.
Family office is different, right? That's another type. Yeah. But I mean retail, I don't know, moms and pops and stuff like that.
Yeah.
But
you should ask a question to their bank or.
Yeah. But people who contact, I'll never ignore someone that reaches out.
You touched on an interesting topic that I think will segue to the non-deal roadshow and investor conferences, which is a question of access.
Mm-hmm.
Because at some point, you as an IR person are a gatekeeper to access to the top. And I'm just curious how you manage that, because if we're talking about timing and we're talking about, okay, what does it mean? You've just gone public, and it means a lot of the good things you talked about. It means a currency. It means your employees have a stock. It means all sorts of things for compensation, but it also means, especially for Israeli companies, I got to get on the road and I've got to meet with minimally the conferences and the non-deal roadshows of the analysts who have decided to cover my stock. That could be because they have to, or that could be because they want to.
Mm-hmm.
So talk about your balancing act of access to CEO and CFO, and put it into the context of callbacks, non-deal roadshows, conferences, and all those kinds of good things. There's enough there for you both to jump right in.
Yeah.
I'll let her.
Okay. So I say, first of all, conferences. Also, I think, first of all, sometimes there are specific conferences that will limit. Okay. They'll say it's only a CEO conference. It's a CFO, or IR can even do the presentations and take the lead there. So first of all, you need to plan. That's also part of we talked about planning for the call, but then after the call comes all that stuff till we go into quiet period, right? It depends on the company. So you need to manage it. And one of the things is also is to actually have an annual IR plan. And you typically know in advance for certainly the conferences. And then you can also plan the specific non-deal roadshows. So today, since COVID, you also can do the combination of Zoom versus face-to-face. I personally am a big believer in face-to-face, at least for the first meetings. It's different in terms of the connection. Yeah. And it depends also. You'll have some CEOs or some CFOs that like going on the road and they're good at doing it, and some that would rather avoid it. So again, it's specific, but it is important to have a plan and try to stick to it. And right, when things change or you have specific, I'd say, emergencies or stories that you want to get out there, so you can also, or sometimes you can tie it around business trips. So again, not when you're in quiet period.
I found that sometimes, and I guess there's a training element here, which is some of these CEOs that start with a smaller company before they go public liked telling the story, doing the test of waters, but all of a sudden they're the guy that the investor wants to speak to. But now you're a publicly traded company. You've hit that $5 billion mark or whatever. Yeah. You don't have the time. How do you adjust the investor's expectation of, I'm already, and especially now you got the WhatsApps, you're talking to people, you've got his cell phone number. How do you be the gatekeeper to save the CFO's time when he started out so close to some of these investors?
You have no choice. You have to be polite, but aggressive Israeli way, and to explain that you are, as you said, not the gatekeeper, but the point of contact, at least the initial point of contact. Later on, if there's a need, I think you can talk to the CFO, you can, at more rare cases with the CEO, but that's your job. I mean, you cannot let the CFO answer each call from a prospect investor, let alone the CEO. So you need to manage that, right?
And you need to be a pro to do it right, because they also need to trust you.
So here's my question. If you were giving advice to an Israeli company going public right now, because I think, and I say this with someone who has tremendous respect for the IR role, how do you get in there so that when you answer a question, you've got the authority of somebody who is helping run the business? How do you convince the CEO to let you into that strategic meeting, to give you access to the heads of businesses, to build your own reputation with the street so that you are the point of contact? And does it work differently at different companies?
I can say from my experience that I was lucky enough, I guess, when I was in my early days, to have CEOs and CFOs that trusted me. I can tell you, actually, you know what? Actually, there was one company that I worked at, not the one of the companies that you mentioned here on the list. The CEO at first wasn't very, it was tough breaking or getting his confidence. But at the end of the day, it was there 100%. So again, you need to be professional. You need to do your job well. And it means knowing to tell the story, really understanding what's going on there, understanding the financials. Being a good IR person takes, I'd say, a lot of many skills, many different skills that could sometimes be perceived as contradicting to each other. You're sort of like a marketing person, but you're also legal. So, and you need to know how to talk and to give confidence and to make people trust you. So I think if you're good, and Rami also...
I think that it's... if a company realizes that they need to hire a professional like Daphna to fulfill this IR position, they understand that they need someone with strong knowledge also not only with the company's jargon, but also with how to speak with the street, with how to speak with the sell side, with the ECM, and they need to delegate that authority. That's their own interest. The CEO's interest is to have someone, a strong professional IR person in the organization, so it can take some of the burden from their own shoulders as far as speaking with the street. And sometimes speaking with the street is not as easy as it may sound, because the company tend to have better times and sometimes they have worse times. So,
yeah, that's right.
All right, I'm going to ask you one last question about the technicals, and then we're going to have some fun.
Wow.
We'll ask you our ending 4 questions. Time zone. You're this Israeli company. You've just gone public. You've got international investors. What are your hours? How available are you?
In today's world?
And now we're trading on Fridays in Israel.
So
we don't trade on Sunday. That's
no Sundays.
In today's world, you need to be there all the time. And many times, as you said, also even investors or analysts, they'll have your WhatsApp number. So you're there.
True.
All right. So the message to CEOs is this. Good IR people, a lot of time. As you prepare for this, there's a lot of things to be thinking about, and pay your IR team very, very well. Is that the message?
Yep.
All right, let's have some fun. Michael, do you remember the 4 questions we ask everybody before we, and my handwriting is terrible, so if you don't remember them, it's going to be tough for you to ask them.
I can certainly not read what you just wrote, but yeah, I remember. Okay, I can try?
You can try.
First one, okay. What's your worst career advice? You go.
Rami said he wanted to do best, so I'm going to let Rami. I'm going to have Rami because he's an old friend.
Best and worst.
Best?
Yeah, best.
Maybe the more correct definition would be not the best, but the best in retrospect advice that I received. Okay, so it was 2016, and I moved from company A to company O. And I just got, on the night of that change, I got a text message from one very highly ranked sell-side analyst at the time. We won't mention his name here. saying, congratulations, you just moved from strong sell to strong buy. That was in retrospect because I already done that. And that particular analyst was yours truly, Joseph Wolf.
Okay, so I get the worst.
You could do worst or best. We're being equal opportunity. here.
Okay, so I'll can I do both?
You could do both.
Okay,
can.
I'll do it quick. So worst, when I was a young IR person, I was also a young mother. I had 2 kids that were 2 and 1 year old at the time, and I took a job working 80%. Why was it worst advice? Because believe me, I didn't work 80%. I just put it all into those 80% hours, which I was paid for 80%. But since then, that was the last time I did that. So, but it is important, I'd say, for young women, never stop working. And at the time, I can say that I was paying more for the people taking care of my kids
Then earning.
than what I earned. But that certainly paid off. And I did look at it as I'd say a learning period. Best advice that I can maybe give to people that are young and enthusiastic and want to make it big in their whatever they do, it doesn't matter if it's IR or not IR, find a mentor. Like if you find a mentor in the place you're working, that's it. You need to be good, right? But that's definitely an important piece of advice that I've also given.
All right, this one's rapid fire. Favorite Israeli junk food?
Burekas.
Crumble. Eating it
Nice.
but ending it with a cookie, right? Then you have the.
Nice.
All right. Business icon. Your favorite business icon?
Yeah, my current CFO, Nahum Falek.
Oh, very great guy.
Yeah.
Wow, I have actually a few, but if I take one of the CEOs that I worked for, Chaim Shani, today at IGP, and also the CFOs that I worked with there, Ran Oz and Daphna Gruber. But definitely, I'd say that time was very, I'd say, important in building my career.
What I love about these answers is they are local Israeli business talent. So thank you for that. I think those are good shout outs.
Mm-hmm.
Last time you changed your mind about something?
Personal or?
Could be anything.
Okay, so personal, I won't talk about personal, but semi-personal. I like to train a lot. So I swim, I do TRX, I do functional training.
Wow.
And I've had friends that were at the gym where I'm training that were come to spinning. And I had this terrible memory from 20 years ago. But I've been doing also spinning now for more than a year and I love it.
Yeah, spinning is great.
Actually, this morning, I woke up and I said, oh my God, I'm going to be interviewed by the electrifying Joseph Wolf. But again, it was a lot of fun. I really enjoyed it. So thank you.
Thank you guys very, very
Thank
much.
you.
I think we've gone through theme 10 in a really interesting way. And it was great to have you. And for all our listeners, also listen to Mashki'im B'Kesher.
Thank you.
Thank you. Thank you so much.
Thank you.